we're supposed to do breakouts, but the breakouts are probably not as relevant right now as the 3T again. So we will show where the breakouts have occurred, but on the basis of the T-line right now. Yeah, I was growing the, that's right. I figured you were getting bored with the same old guy night after night. So, anyways, the reason we want to concentrate on the T-line is because this is what gives you an extremely high probability of a breakout. I guess I'm not going to fool you. You all know who I am now. I tried to put it on. So the reason we're concentrating on this is because there are things breaking out right now, but it's not in the typical manner that we would expect a breakout. So I'm concentrating on the T-line because this is the most powerful indicator that I've come across in the last 40 years of trading. And if you understand how it works, it just dramatically improves your probabilities of being in the right trade at the right time. So your T-line truism is, you see a candlestick buy signal and a close above the T-line, you've got an extremely high probability, and this is the term you want to really keep set in your mind. Extremely high probability that you're going to be in an uptrend. Same scenario, a candlestick sell signal and a close below the T-line. You've got an extremely high probability a downtrend is being confirmed. And this is where that truism becomes very even more prolific when you see a support and resistance level. And why is this relevant? Because we know what makes for our trades or the good trend reversals. The signals are the patterns, where we are with stochastics, trend lines and moving averages, or anything that we can use as a support and resistance level. But the most powerful one is the T-line. Is the T-line. Anytime we see a trend, there was kind of buy signal or sell signals in here, but it was this signal right here that traded well below the T-line that started the downtrend. So the important relevancy, why the 8 mark, who knows? The 8 EMA works like a Fibonacci characteristic. It's a, we don't know why, and it probably doesn't really matter whether you want to use the 9 simple or the 10 simple or the whatever you want to use. My suggestion to everybody is put the 8 EMA on your charts and then see how often, not how often it breaches this level and changes direction, but how often the price will actually come right back to the T-line and use it as support. And the reason that's significant is nobody has the T-line on their chart or the 8 exponential moving average. So when prices come back and use it as a support, it's not like everybody's watching to see what it's doing at the T-line because nobody has it on their chart. It acts like a natural support and resistance level of human nature. So the reason we have the T-line as a confirming indicator is because the probabilities are so greatly enhanced when it acts like a support and resistance level. It just, I used to, after being the worst investor in the world, when I started using candlesticks, I started trading positive. I mean, went from contributing to the markets every month. I started breaking even which was happy days for me, but very quickly we started going positive. Just trading off the candlestick charts. But when I added the T-line to it, my income exploded to the upside. Livu, you'll see what the probabilities are. So here's the most powerful screen that I have in my presentations. The T-line has Fibonacci characteristics. So if you take candlestick signals, which are the graphic depiction of investor sentiment, and you use the T-line, which acts like a natural support and resistance level of human nature, when you combine those two, you greatly improve your probabilities of staying in a trade when there might be times that you get juked out or whipsawed out of a position. Matt, make sure you are up at the top of your screen that you're on screen sharing and not slides. Try that. Okay, so if you see a candlestick buy signal, you can stay long until you see that candlestick sell signal and a close back below the T-line. Conversely, if you see a candlestick sell signal and a close below the T-line, you can stay short until you see a buy signal and a close back up above the T-line. Okay, good. Didn't want you to miss out. So this T-line strategy can be used on a 1-minute chart, 10-minute chart, 60-minute, daily, weekly, or monthly. Everything you see on a candlestick chart is what they call fractal, which means it works on all time frames. And that's also because human nature works the same way. That's why the parameters all work the same way, because if you go to the definition of a candlestick signal, it's the graphic depiction of everybody buying and selling during a specific time frame. Doesn't matter whether that time frame is 1 minute or 1 month. Was that a band? Okay. Okay, great. Thanks, Mark. I forgot what I was saying. That's such a great. Oh, so doesn't matter whether this was a 1 minute chart, a 5 minute chart, or a daily chart. It's going to look exactly the same. And notice what happened to your trend. Look at our big shooting star. It was time to take profits. But was it time to go short, or was it time to buy back in? Well, you could have started buying back in, or if it opened positive and did our doji sandwich, that would have told us we had a J-hook pattern setting up. But what happened right here? Instead of a doji sandwich, we got an evening star signal. So you had a shooting star. It was time to close out long positions. Might be ready to go long again on a J-hook pattern. But when it did this, now you've got an evening star and an evening star and a shooting star, both sell signals, but it was when they closed below the T-line that told you could start going short, that you weren't going to be in an uptrend. Now, the reason I love showing the charts using the T-line is because the probabilities are so greatly enhanced that when you see something, the sell signal or close below the T-line, that's telling you there's been a drastic change of investor sentiment. How soon does the close below the T-line must occur after the sell signal? It doesn't. If you just use a simple statement that if you see a sell signal and a close below the T-line, it could have bobbled around, but as soon as they closed below the T-line, that was a confirmation. Hello, Long. We've missed you. Oops. So there was our shooting star, there was our confirmation to close out, and there was our confirmation that not only is the uptrend over, but the downtrend is about ready to start. And we can use it for telling exactly where we're heading. Notice when they broke the market down, I forget when this happened, brought it back up, failed at the 50, which was creating our blue ice failure, which meant if it closed back below the T-line, it was telling you they weren't going up through the 50. They were still heading down, heading for the next target. So again, the truisms of candlesticks is very obvious. And one of the obvious truisms is that besides our rule, if you see a candlestick buy signal and it close above the T-line, you can stay long until you see a candlestick sell signal and it close below the T-line, with the caveat that the further away you move from the T-line, the higher the probability it's going to come back and test it. So this is where you can get very good exit strategies. You're in the overbought area. If you use the simple professing of the Japanese rice traders, where do most people buy? They buy exuberantly at the top. What's telling us about the exuberance up here? Well, look how big. They gap it up, big candle, and then our shooting star, and then a doji. What are these signals telling us? There's probably a change of investor sentiment. What's our doji rule? It's going to move in the direction of how they open after a doji. So what do we do if it opens lower? We close out the position. Because now we can pretty much calculate where is it heading to. It's probably heading back to the T-line. Is it going to do a J hook? We don't know. Is it going to continue down? We don't know until it gets here. That and that told us that they aren't going back up. You can start shorting this. So remember, anytime you see that exuberance at the top and see sell signals, and you're that far away from the T-line, the probabilities become extremely strong that you want to start taking profits. However, a close below the T-line all depends on the time frame you're using to trade. I use a 15-minute charts. You might have a lot of 1-minute charts that close below the T-line. I mark true, but that depends on what time frame you're trading. If you're using the 10-minute chart, then use the 10-minute chart as your bellwether. I use the 10-minute chart. So if I'm using the 10-minute chart, let me see. If I'm using the 10-minute chart, let's say this is a 10-minute chart, and I start seeing indecision, well, maybe I'll flip down to the 5-minute chart, and the 5-minute chart may have already shown that it's trading back below the T-line. Well, now I can watch the 5-minute chart, and if it continues, it pretty much tells me my 10-minute chart, which is my bellwether chart, is going to continue lower. The dark doji after the white doji violated the doji rule. No. What's our doji rule? It's going to trade in the direction of how they open it. So did they reverse it here? No, they traded it positive and did another doji. It wasn't until this one where they opened it lower and told you it was time to close out the position. Yeah, but it didn't even come back down to the doji of the previous day. Now, had it closed right here after opening up here, what would you have? Now you would have a bearish engulfing after a doji or your bearish left-right combo. That would have had me out of that position. Mark, it's up to each individual. I used to trade the E-minis off the 1-minute, 3-minute, 10-minute chart. That meant I was trading relatively fast. Maybe you only want to trade 2 or 3 times a day, so you might use a combination of a 5-minute, 15-minute, hourly chart. So it's up to each individual to use the chart time frames that fit with the trading that they're doing. And then you just start using your combination. Let's say you're using the 15-minute as your bellwether, and you start seeing it might be reversing. Now you flip down to your 10 and your 5-minute to kind of get faster confirmation of what your 15-minute might be doing. Yes, the T-line is the 8 exponential moving average. The other moving averages, let me find one that has better moving averages. No, I don't have all of them there. Let me go to this one. The other moving averages on your chart are the 50-day simple, the 200-day simple. The reason you have those on your charts is because every major money manager around the world uses those moving averages to make their decisions. We use them to see exactly what their decisions are at those levels. Groundhog Day. All right. You can trade off of tick charts. Remember, candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. It doesn't matter whether you're trading stocks, bonds, tulip bulbs, anything that has fear and greed. Candlestick signals are going to show show what's going on in investor sentiment. You can put the 100 SMA on there if you want. I could take everything off this chart and use stochastics, the signals, and the T-line and trade very successfully. The other ones are just confirming indicators, giving us more of a indication of where people are buying and selling. No volume. Oh, I don't have volume on here. So anyways, and so there's that kind of that concept that the further away you move from the T-line, especially with you in the oversold area, the higher the probability it's going to come back up and test it, which gives you, if you were short and you saw this gap down and started trading positive, you'd probably want to cover your short. Even though you haven't had a buy signal, what other pieces of evidence do you have that the buyers might be stepping in? The fact that they gapped it down in an oversold condition. Remember what the Japanese race traders tell us? Where do most people sell? They panic sell at the bottom. If they start bringing it back up, what was our inclination that they could start buying here? Look how far away you are from the T-line. The probabilities are it would bounce back up to test the T-line. My stochastics are 12.33 slow. Yes, in this case, that was a meeting line. But if you had been short, look where you would have started going short when it started rolling over below the T-line. Where would you think of going long? Where are the probabilities going against you? Now that you're in the oversold area, that far away from the T-line. Steve, that's why I don't use anything other than the signals. The green line is the 3T line, which is a 3 exponential, which we'll be going into in another session. Yeah, so just because the market sold off doesn't necessarily mean it's going to follow any technical analysis like Elliott Wave. He even said that the Elliott Wave was very inconsistent. So I use waves, and that's the most important thing that we got out of Elliott Wave is that prices move in waves. Yeah, I want to do what the signals are telling me. So if I see a failure of a support or a resistance level, the T-line becomes my next guide. Where can I get in? Right here. Where do I think my next target is? Up here to the 50. And when we get up to the 50, we have a doji. Is it going to go through? Well, the next day they open it lower and close below the T-line. What's that telling me? I'm still in this downtrend. So this is not rocket science. If you just use the probabilities of a candlestick sell signal and a close below the T-line, especially with your stochastics up in the overbought area, the probabilities are extremely strong. You stay short until when? Until you see a candlestick buy signal and a close above the T-line, and or the further away you move from the T-line and see a buy signal in the oversold area, that's when you want to start taking profits. Yes. I always use the example, Jim, that when I was in the Market Technicians Association in Houston, they would have a meeting about once a month. And out of the 20 people, there was 9 of them that were Elliott Wave advocates. And when you would pull up a chart and you would ask them what wave you were in, you'd probably get 40 different answers from those 9 people. So Elliott Wave only illustrated one thing, and that's prices move in waves. What is most effective is the fact that when you see what's actually happening in investor sentiment, and it's confirming with our confirming indicators, there's our bearish best friend, a doji gap down through the T-line. What's that tell you? There's a lot of force to the downside. So because we know that prices move in patterns, the T-line works as a very effective pattern confirmation. We know the bobble pattern, which is a J-hook pattern that has a visible resistance level and a breakout level. And what's our confirmation? Well, they failed at the 50, but they supported here on the T-line. And then when they came back up through the 50, what did that tell us? We have a J-hook pattern in progress. We're probably heading much higher. And what confirmed that? Just to be able to visually analyze that they could never close it below the T-line. Yeah, I would be surprised if you're going to add now. Everybody's got their own opinion. My opinion is we're about ready to see some buying coming back into this market, and we'll get to the live charts. But this is how we can confirm our trends and our breakouts based upon the incorporation of the candlestick signals pattern and confirming it with the T-line. There's our bobble. Failed at the 50, pulled back to the T-line. If I took profits here, it's because I didn't know whether they were coming back down here. But when I saw that they were staying above the T-line, it used to be, if I happened to have a profit in a trade before candlesticks came along, I was lucky. And if I took profits, they weren't going to fool me and get me back in and then take more of my profits. But now I know the way price movements work because of human nature. But if I sold out here, I'm buying back here because now I know I've got my next leg to the upside. Now look what happened up here. There's our J-hook pattern setup. If we took profits in here, or if we were waiting to see whether they were going to close below the T-line, the fact that they didn't close below the T-line told us what our next pattern was going to be. Another J-hook pattern to the upside. So this kept me, if I bought down here, let's say at this bobble breakout, had some trading, but it never closed below the T-line. Had some profit taking, but it never closed below the T-line. In the old days, before candle or the T-line came along, I might have closed out here and said, all right, if it goes back up, I'll buy it back. But usually I took that money and it was off someplace else. This way I can comfortably hold this position to the maximizing my profits. So if I see something like this, even if I miss this move, I know what this move is going to be. There's my bobble breakout. Couldn't close below the T-line. They gapped it back up through the resistance. I can expect this wave to be the same magnitude as this wave. I had to drink my monster drink. All right, so this is all using the T-line to tell us when the strong moves are going to occur. And once they do, look at our fry pan bottom. This is the breakout right here where the pattern started. And notice what the T-line did. Kept us in this right up through that resistance level. A bobble pattern. Yeah, I should have a bobble pattern. Now I'll go back. A bobble pattern is when they come up, hit a resistance level, then they bobble down, and then bobble right back up again. So if you took this 50-day moving average out of here, you'd still have a J-hook pattern. We call it a bobble pattern because it's much more definable. You can see where they sold off, and then we can see where they broke out to the upside again. We know if we have a fry pan bottom, what our expectation is on the breakout. A very strong price move. How long is this price move? Or how long do we stay in it? Until we see a sell signal and a close back below the T-line. Now, why is that important for investing? Because if you were like me before candlesticks came along, and so rarely did I have a profit, that if it moved up here, I'm thinking, oh man, I've got a good profit. What would be the most fearful thing for me? Is for that profit to disappear back to a loss. Sure wouldn't want to do that. I better take my profits. What this does is it keeps you in a position just based upon the probabilities that as long as you're above the T-line, and notice in this case, you're even above the 3 T-line. So logic says if you're above the 3 T-line, that's still strong buying because they can't even get it back down to the T-line. That's what everybody tells you, Art. Cut your losses short and let your profits run. I've been investing in over 40 years, I hate to say, and I've heard so many money managers tell you to cut your losses and let your profits run, but I've never heard a single one of them tell you how you cut your losses short and let your profits run. With candlestick analysis, it becomes very easy, very common sense. If we're buying based upon a buy signal, we stay long as it doesn't close back below the T-line. If we buy right here, because we're thinking it's breaking out and it closes back here, it didn't break out, you close out your position and move on to another one. So anytime I see the breakout level, I see what the T-line's doing, you can see where this fry pan bottom started, and you also had the added benefit that that was right where the 200-day moving average was. So what is our simple rule about buying a candlestick signal? We're looking for candlestick buy signals when the stochastics are in the oversold area. We're looking for pattern breakouts probably when our stochastics are up here in the overbought area. So a lot of people say, well, shoot, I don't want to be buying stock and chasing it up here. You do if you know what the results of a pattern breakout is going to do for you. When do people buy? In this case, they wait. If you're an institution and you've already gotten approval from your management to go ahead and buy whiting, and you see it drifting, what is your best place to buy so that you don't get fired for doing a bad trade? You wait to see if it's going to support down here off the 50. That becomes a much higher probability place to start buying. What do we get to see graphically about investor sentiment? We can see they hit the 50 and they're buying. So if they're pulled back, and this is a normal trading process, that if they break up through a resistance level, they'll come back and see if it's going to test it as support. If it shows support, which we can see immediately, because we can see the buy signal after a couple of dojis right here on the 50, stochastics coming up, and a close above the T-line, where do you think everybody else is watching to see for the next target? Right up here at the 200-day moving average. Again, this isn't rocket science. This is just graphically learning what happens in human nature. There's our hanging man sell signal. What do? They pull right smack dab to the 50. What do we see down here? There's our morning star signal and a close above the T-line. There's our next uptrend. So basically what we're looking for or using with the T-line in conjunction with, well, let's put it this way, the signals in conjunction with the T-line and other indicators that everybody else is watching, it dramatically improves our probabilities of not only being in the right trade at the right time, but in a very strong trade at the right time. So this is the blue ice failure. This is where this might be your ice when you fell down through it. They come up, try to find where the hole they fell through. They can't find it. They fail. They go to the bottom of the ponds. Blue ice failure. They're heading back to the next major support level. Okay, Chris, this is why I've been pushing it, because candlestick signals are the graphic depiction of human emotions, and the T-line acts like a logical support and resistance level. What is this indicating? We're in an uptrend, but notice how we're getting very indecisive. Look at all these doji type days. What's our simple rule? We stay long until we see a sell signal and a close below the T-line. So if I was long on this day, what would I need to be looking for? Well, remember our doji rule. It tells us it's going to move in the direction of how they open. If I wake up and the pre-market futures are showing the market's trading off and it's closing or opening down here, I'm closing out the position immediately. I don't know whether you would call it a fib number. I would call it more a Fibonacci characteristic. That there are some things in human nature that are just constant. Okay, Art. Yeah, it works for Forex. The only thing that you're not going to see in Forex is the gaps. Signals are the candlestick signals with gaps. So we're in an uptrend, or here's our bullish harami. What does this tell us? We're back in an uptrend. So whatever profits we took here, we start buying back here. What do we have here? A candlestick sell signal, a hanging man, and a close below the T-line. We close it out. Where did it go? Obviously, it didn't support at the 50. Went down here, and now there's our meeting line again. And when they gap down in the oversold condition, again, we just use a simple rule of what the Japanese rice traders have told us. Where do most people sell? They panic sell at the bottom. Now, this was easy for me to learn because before candlesticks came along, I was the person contributing to all that selling down there. And I would always just seem like every time I couldn't stand it anymore and sold out, things would turn around right away. So when we saw this was going to bounce, where do you think our first bounce target was? back up here to the T-line. So here's an obvious one. Tesla, not too long ago, 3-4 weeks ago. Remember when it started running like a scalded dog? And how did we know we were getting ready to start taking profits? Because we've been in an uptrend, they started gapping it up. Not only did they gap it up, now they had big price moves. Then they gapped it up and traded all the way up here. When it was trading right here, what can we obviously see? Look how far away we are from the T-line. So when we get that far away from the T-line and they've been gapping it up, again, we have to go back to where do most people buy? They buy exuberantly at the top. So there's a very simple method for taking profits up here versus here or here. If we know that we're way too far away from the T-line and all that exuberant buying has come in, we just go to our 10-minute chart. And it keeps moving up, we put our stop here, moves up, we move our stop up, moves our stop up, moves up, hits our stop right here. So we're out up here versus waiting for it to come all the way back down to the T-line. The gray line is either the 34 EMA, which is a kind of a secondary support and resistance level, and on some of the older charts it may have been the 20. So here's a very easy way to identify reversals at the top. Obviously a candlestick sell signal, and then signs of exuberance at the top where they're starting to buy excessively. And then when the price has moved too far away from the T-line, that confirms the excessive buying up there. And when you see that, then you just flip to your 10-minute chart, and that will get you out at the appropriate levels. So the reason I keep pushing the T-line is when you're using the T-line with candlestick charts in conjunction, you're definitely putting the probabilities in your favor. Is there a rule of thumb for how far above the T-line the stock should go before you enter or exit? No. You're just looking to see what it normally does, and then when it becomes excessive, especially when you're up here in the overbought area, that should be your alert to start looking for sell signals. Now, we've been having a lot of people request doing the full-scale 2-day training again, which we're going to do, but we have stepped it up a little bit. Instead of doing the basic training, we call this the Triple T training, which is coming up on October 4th and April 4th and April 5th. And this is going to be doing the basic training, but enhanced with how you use the T-line as your confirming indicator. Now, the reason we do these 2-day trainings is I know a lot of you have been in these sessions either on a Monday night for the members or Thursday nights, and then we have the evaluations going on all day in the chat room. So you're getting bits and pieces. What this training does, it starts you right off from the beginning and allows you to see the logic of the using candlestick signals in a chronological order. Yes, there is, I think, a discount for members. That I'll have to check, or we'll have to check with Abe. Or it may have already been discounted. I think we usually charge $9.97 for that weekend. But whatever it is, okay, that might be, Don. What I always try to make sure is that you're going to get well more than your money is worth. Because when I was learning candlesticks, I just wanted to have somebody to tell me the logic or why this stuff worked. And if I could have had somebody tell me not only what to look for, but why it works effectively, I think that's a Saturday and a Sunday. that if the double benefit you get out of candlestick signals is not only did the Japanese race traders illustrate when these signals worked effectively, but they also explained why they worked effectively. So when you've got that combination information, now you are controlling what you're doing as far as your investing instead of following somebody else. Rossi, we usually start around 9:30 in the morning, and I try to finish it out around 3 in the afternoon, but unfortunately it usually goes to 4 or 5 in the afternoon. Okay, thank you, Doug. Yes, that's all part of this. And Pamela, we're going to do a little bit of that right now. So anyways, this is the type of training where we take all the bits and pieces that we kind of go through, like showing the entry and exit strategies, how to scan for the best trades, where to set your stop losses, where your ultimate entry points are, when you start seeing potential profit taking, and most importantly, because I was the worst investor in the world, everything I have done using the logic of candlestick analysis is to keep my emotions out of my trading. And that's exactly what we go through in this whole methodology, is showing you what to do so that you're not making an irrational decision, that you're making a high probability decision. Now, the breakouts of candlesticks, let's see if I can get this in place. Oh boy, let's see if I can do this. Is that fitting all right, Jim? I guess it is. This is wheat today. And I missed it because I was expecting a big reversal in the setting up search parameters covered. Yes, we go through everything, because it all is built up on the logic of what you do, how you set up your scans, what you use for entry strategies. This can be yes, David. Remember, options are just a method for buying stocks, and so all we're looking for is the charts to be buying or selling, and then we figure out what type of option strategy we put on. We have this room. If you're having problems with sound, go ahead and go up to your right-hand corner, click on the red X, and then come back in. You might get a better connection. Where was I? Yes, so this applies to options. I have an option trading account, which obviously I can trade options in. So I use these parameters and even specific parameters of when to actually be buying. So I'm not sitting with an option trade, sitting there for a long time hoping that it's moving. I buy when I know it's the exact right time for the move to occur. Yeah, wheat was a big move today, up almost up the limit. Robert, if you took the Triple T training, you'd come back for free. Can you go long if price starts trading over the T line, or does it need to close? You want to see it close above the T line. And I have a few HS that will show you what to do. Well, this is after hours trading right now. They're trading up a little bit after hours. Are there slides of the different patterns that we can keep? Jamie, there's a bunch of things that you can use. Ha! Like your mouse pad that has the 12 major signals on. we've got flashcard sets that you can use. And I also have a 2-foot by 3-foot glossy poster that you can hang up. That I tell people that every American family should have one of those hanging up in their living room. The Triple T training is April 4th and 5th. What symbol? Oh, in toss, it is /ZWZ20. Brad, no. I'm often asked when I do training to new groups, I always get asked the question, how many days or how many time frames does it take to confirm your signal? And the answer is 0. If I see a candlestick buy signal and it opens positive the next day, I can be buying because that's exactly what the signal is telling me. That's right. I'm trying to be incognito. Okay, so let's take a look at a few. Here is what the probabilities do for us. Yesterday we recommended DNLI, but it opened here and didn't close above the T line. However, notice what we had. We had buy signals occurring here and stochastics coming up. Today you could be buying it, or you could be buying this on positive trading tomorrow because what do we got? We got buy signals and a close above the T line. MAG is the silver stock. Now, here's another one. We have a bullish engulfing, a close above the T line. You could have been buying it today, but look what it did. Pulled back. Not good. However, it still closed above the T line. So if you stayed in it, you have a very simple trading strategy. It needs to open positive and trade positive to stay in it. If it opens lower and starts trading lower, you close it out because that means it's still failing the T line. Dave, I'll get to, I think I've got Tesla in here. I'll take a look at it. Now remember, as I remember, what is this signal right here? Anybody? There you go. Thanks, Deanna. None. Now, what does that tell us? This is just a bounce. Now, it doesn't tell us that it's not going to go up, but it doesn't have the same magnitude of hold on to your individual ones until I tell Jim to do the double line, because I got a bunch here and it will probably be some of yours that you're requesting are probably going to be in there. All this tells me is maybe there's going to be a bounce, and a bounce to where? I watch to see what happens once it gets to the first resistance level. Now, if this had opened here and came up and did a bullish engulfing, that would be a much more compelling reversal signal. Joel, I don't know where the one white soldier came from. I started studying candlesticks 40 years ago or so, and I've never come across one white soldier. Now, there's 3 white soldiers, but never a one white soldier. So what you have to be careful of is what somebody has developed as what they consider a candlestick signal in modern times. The logic is, if the Japanese rice traders had identified this as a signal, they would have told us what it was and explained what it would be doing, but there's no explanation for this one. Okay. Do you have alerts on the scan you use? Nah, because I'm usually sitting here and I can scan very easily. If you don't know the signals and patterns real well, once you set up your scans, you're going to be able to find the best trades in less than 20 minutes each afternoon. I can go through my scans in probably less than 5 to 7 minutes and come up with the best trades for the next day. Yeah, so as I mentioned, I'm looking through all the old material, which I did. All right, you can look it up. It's just, if this was a signal, it would have been in the old information of candlesticks. I think it's somebody's new invention recently. Should we be using daily charts to then confirm with 10-minute charts because they're often opposite each other? You can. If I'm getting ready to buy because of confirming buy signal, but the market is opening lower and things aren't moving around, maybe then I'll flip to my 10-minute chart to see when things are starting to pick up. Okay, so Netflix, you can see the buying down here. Now there's your big signal. That's the inverted hammer signal. You had a hammer signal over here. This is with the benefit of candlestick analysis is this day right here was down from where it closed the night before. But what can we proceed with our candlestick signals? They opened it lower and there were still buyers in there that day. What did it do today? What traded up and what changed our probabilities dramatically? The fact that they closed it above the T-line. This makes Netflix much more attractive. Amazon, you saw the other day, closed right here on the T-line. Then the next day, yesterday, did a bullish engulfing signal, closing back up above the T-line. Once again, you can see your buy signal setting up here, and it finally confirmed by closing above the T-line. I'll go through these real quick just to show. There's your left-right combo. Inverted hammer on FedEx. What did it do today? Confirmed our signals and closed above the T-line. What's our probabilities? It's probably heading higher. Back to one white candle. I bet you dime to donuts that if you go back and do a study of one white candles and compare them to the one of the 12 major signals, that the force or the strength of a reversal with something other than a one white candle is going to be a lot stronger or a lot more higher probability than whatever they've developed on this one white soldier. So I guess don't take my word for it. If you want to trade one white soldiers, see how effective it is. My rationale is, if it was a good, strong signal, the Japanese race traders had 400 years of analyzing these signals and telling us what the investor sentiment was, and I never found one white soldier in that. CB, go ahead and click on your red X and then come back in. You should have everything pick up. Oh, you missed those. Tesla is not a signal. That's not to say it might not be a bounce, but more than likely it's just going to be a bounce. But Amazon, was that the other one? Amazon did have signals and close above the T-line. That's going to be a much more compelling, reversal trend. Yeah, Bill, that's what I often say is they didn't become wealthy, they became legendarily wealthy. Hold on to your individual ones until I get to them. Let's see, do I have AH? I don't, but I'll look at it because it's one that we're all following. You can see the wedge formation breakout with kind of a little morning star signal off the T-line. Right now you stay long. If I was long, I'd have a safety stop right here at today's low. What makes not being a blue ice failure? What makes not being a blue ice failure? Well, blue ice failure is just a simple strategy where fell through a support level, came up and used that support level as a resistance, and then it drops off to the next support level. Is that what you're asking for Amazon? Oh. Kind of a blue ice failure right in here, where it came up, failed at the 50 and the T-line, and headed back down. Which in this case, that was your first target. Your second target would have been a bearish J-hook pattern, which is wave 1, and wave 3 are going to be approximately the same. Okay. Do you use doji as support and resistance level? Say that again. Do you use doji as a support and resistance level? I don't understand that question, Irina. No, doji it's the moving averages that are your support and resistance levels. The doji is just a signal telling you when there's a change of investor sentiment. So we recommended ping yesterday, but it didn't execute because it didn't get up through the T-line. Today, it came back up, which was not unexpected because there's your big belt hold type signal. And what does a belt hold signal tell you? Well, first of all, they gapped it down in an oversold condition and brought it back up. Now, a belt hold is different in respects that the bigger they move this down and bring it back up, that's a belt hold. It's not a piercing signal, which would have closed up halfway, or a bullish engulfing that would have closed above that open. But the belt hold is still relevant because they gapped it down in the oversold area and the bulls stepped in, which meant they wiped out a lot of sellers here, which means any buying from here does not have the sellers in front of it anymore. Does it matter that it is supported and resisted by 2 moving averages on Amazon? No. Now you use those to kind of expect what might happen there, but as you can see today, the 200 wasn't a support or a resistance level. The 50 was. Now, is there more upside? Probably, because your stochastics are still coming up and you're coming up off of buy signals. Yeah, spinning top just has a little bit bigger body. A doji, usually the true doji opens and closes right at the same level, and a spinning top just has a little bit of a body. But they both represent the same thing, indecision between the bulls and the bears. There's an inverted hammer, gap up. Now, as we go through our training, we're going to go through each of the major signals. You'll find that the inverted hammer is probably the least frequent of the 12 major signals. Now, the reason we call them the 12 major signals is because there's about 50 or 60 candlestick signals in the candlestick universe. But as I was learning them, I discovered that most of them don't ever show up. So instead of using up my mental time and energy learning those, I discovered the ones that occur over and over, the 12 major signals, are what you want to use. Now there's a very strong case for the inverted hammer, and this is just from my analysis over the last 4 decades. That if you see an inverted hammer and they open up positive the next day, the probabilities are probably 95% or greater that you're going to be in an uptrend. So anytime I see an inverted hammer, that becomes a very relevant buy setup. Let's see, we did ping because of the belt hold. We also recommended PBG, also because of belt hold. Now, if you had bought this one today on positive trading and it closed right back here at the T-line, now your strategy becomes very simple. It needs to open positive and trade positive to stay in it. If it opens lower, what's our doji rule? It's going to move in the direction of how they open it after a doji, which tells us they're still in a downtrend. They couldn't get up through the T-line. This is another aspect of how you cut your losses short and you let your profits run. So the whole idea is, I know that probably 70% of my trades are going to be profitable. That sounds pretty good. Now, some of them may only be profitable by 0.3%. Some might be profitable by 300%. But every time I put on a trade, I know the probabilities are in my favor, that analyzing the candlestick charts, which is the graphics of human nature, that has remained consistent for hundreds of years, that we're probably going to be heading in the right direction. So I thought I was pretty clever, but there was a good amount of time where I was making money, but not nearly the money I thought I should be. And that's because to be a successful trader, not only do you have to recognize and know what to do on a successful trade, but you need to see if that 30% of your trades aren't working. You better see that very quickly and close out that position so you can take that money and move on to one that has better probabilities. What did I just do? Tallow. There's your Morningstar signal. There's your, what's your ultimate inverted hammer? It's a gravestone doji. Now we're traded up above. This one becomes a very viable buy signal or buy on positive trading tomorrow. Oh, Shazam. Get it wrong. LTG. So here's a perfect example. There's a setup for a good buy. Inverted hammer. Close right on the T-line area. What's my strategy? If it opens positive, I'm buying. When it opens down here, what's that telling me? I don't want to be in that trade. When you trade, what is your stop loss when you're trading options? The stock price. If you're buying something, let me see if I can find something. If you're buying something based upon what you think is a good bullish signal on the stock, you're not, if you're buying the options, you're just buying using a method to buy that stock. So what tells you to get out of the options when you analyze that you don't want to be in the stock anymore? The green line on LPG is the 3T line. So this was more of an illustration. So here's another method, and we're going to be doing this on our T-line training, is additional confirmation is if you see buy signals, number one, if they can't get through the T-line, you don't want to be buying. And number two, if they can't get the 3T line up through the T-line, that's probably a little added fluff to tell you that you're not in an uptrend. On Dow, can That be a Harami day? Small body? Yes. Did we not do the? I'll get to the indexes here in a minute. Let me go through what confirms in these what's creating the breakouts. Here is INT. You had your buy signals, inverted hammer, hammer, up through the T line. So it came back down yesterday, right here on the T line. So what was our trading strategy? It had to open positive and trade positive to stay in it. Had it opened lower and traded lower, what did that tell us about our T line? It was still acting as a resistance. Just because it has a wick does not necessarily mean it's changed the investor's sentiment. Yes, it traded up there, but it closed above the T line. So if I was trading Netflix, which I'm not, I want to see it open positive and trade positive. If it opens lower and trades lower, what's it tell us about our T line? It's still acting as resistance. We don't want to be in it just yet. So just because you have a wick doesn't necessarily mean that means there was profit taking. But there was buy signals. If it opens positive and starts trading positive, what's it tell us about our profit taking? Profit taking's over. We can still be buying. All right, let's see. So if we see a buy signal and a potential reversal below the T line, what becomes our potential target? As you can see in CNK, there's our Morningstar signal. There's our doji in the oversold area. What's our doji rule? If it opens positive and trades positive, it's probably going positive. Where was our first likely target? Right up here to the T line. Would we have expected it to get there in one day? Definitely not. But one of the major advantages of candlestick analysis is it puts you in the right direction of situations where if you do have a big move, you're going to participate in them. Was there a signal at the bottom of Netflix? This was the signal. Inverted hammer, open positive the next day, or traded positive the next day. Not a clean reversal, but you have a hanging man, an inverted hammer, and now you can see that every time they opened it, they took it up. Opened lower, took it up. So you can see there's buying. That's what it's not a clean chart, but it's pretty much telling you that the buyers are stepping in here, even though you don't have a clear-cut reversal signal. Box, left-right combo. Again, add up all your pieces of information that tell you when to buy. Where do most people sell? They panic sell at the bottom. Look how they gapped down and did a doji. Did another doji. Did a left-right combo. And today closed up above the T-line. Where's your first target? Well, they'll probably fill this. There's your first target. There's filling that gap. Second target, third target, fourth target. But what are your probabilities at this point? As long as you stay above the T-line, you're probably in an uptrend. Mike, yes, there were a lot of stocks that had strong days, but then sold off near the end of the day. Let me explain that more when I get to the pull up the indexes. Oh, Pashal, what is that? PFGC. PFGC. There's a Morningstar signal in the oversold area. Where's your first likely target? If you're buying on positive trading off the Morningstar signal that was that far away from the T-line, it's probably coming back up to at least test the T-line. Yes, so we need to see, let me get to the, hold on, I just got a few more that are showing you when you see a buy signal And confirmation, where was your first target? At least back up to the T-line. Was it going to do it all in one day? Don't know, but at least you're putting yourself in positions where the probabilities of it heading up in one day is pretty strong. Now, there are others that if you were buying and they came back and closed back below the T-line, you have two alternatives, but usually my alternative is I close out the position because, again, what is our probabilities when they're closing below the T-line? They're not in an uptrend. Right now, Mark, yes, you might not trust the moves to the upside. Now, SA is a little bit different than OR. There's a doji right on the T-line. This makes the trading very simple. The doji rule. It's going to move in the direction of how they open after a doji. Now, that's a gold stock. It's probably going to get a little bit more benefit if we see gold trade positive tomorrow. Looks like it's in the oversold area, doing some little indecisive trading here. INO. Right now, I would not be in INO. And why is that? Because of human nature, look where the buying started with your little best friend. Then your doji sandwich. Then your gap up away from the T-line. When it gapped up here after being at $2 or $3 and it now is up here at 20, what do you want to do? You want to immediately start going to your 10-minute chart. Look what happened. This was kind of one of those story stocks. After that big blow-off, this is what you'll get until you see the next buy signal. Why? Because everybody's happier than a pig in doo-doo when it's going this way. When it comes back, the bulls don't know whether to be buying, the bears don't know whether they should be buying, so it moves sideways. Remember what happened in Tesla over here. Came back, it traded sideways for a week and a half until your next signal. There's your left-right combo. You could call it a bearish belt hold. Yes, or a bearish belt hold, bearish engulfing signal. But what was the indicator? One, you were in the overbought area. Two, you were starting to see exuberance away from the T-line. Three, when they gap up well in the overbought area, get ready to start taking profits. So this, again, is not rocket science. Human nature works the same way time after time. Look what happened on this one. Big blast off. Went from 20 to 70. There was your big hanging man signal. It gapped up here. If I had been trading this and I was long and hadn't closed out some here, I would have had a safety stop right here because logic says if it opens positive, it should be going positive. If it comes back down through here, where do you think the next target's going to be? Right back here to the T-line. Then you can see what it's done after that big blow-off. Move sideways. A few more. We recommended ANET because of the bullish engulfing, the inverted hammer, the hammer. You can see what was happening down here. The buyers were stepping in. And then it traded positive today and closed right back on the T-line. If you bought it, you only have one choice. It needs to open positive and trade positive. If it opens lower, what's it telling us about our downtrend? It's still in progress. Move the money back out. AAOI. Very simple. Doji, 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 doji. Bullish candle closed right on the T-line. What's our trading strategy here? Well, this is our buy signal. It's kind of a cradle pattern. Headboard, bed, even though it's choppy. But anytime you see a series of dojis and you see which way they're taking it, that tells you after. Remember, if one doji means indecision, a series of dojis means greater indecision. And now they've told us what their decision is. So if it opens positive, what's everything we can conclude? They've reversed it, and if they open it positive, they're confirming this reversal, number one, and number two, they're telling us the T-line's not acting as resistance anymore. Yes, so this will most likely be on our video tonight to buy. NCR, Morningstar signal, came up and touched the T-line today. Very simple. If they confirm and by opening positive and trading through the T-line, you want to be a buyer just because of the reversal signal. Same scenario, big bullish engulfing signal on New Skin. If it opens positive, you can be buying. And then what's your stop loss strategy? Don't want to see it close back below the T-line. And IMAX. I couldn't figure out why they were buying IMAX, but they were discussing in the chat room that they're going to help the cinemas. Well, there's a big, huge Morningstar signal that closed up above the T-line. Kind of a scoop pattern. I would suspect they're coming back up into the moving average area. And this one, we pointed out in our chat session last night, you could see what was happening here. And this is where you use your 2+2 analysis. 2+2 is, we can see the signal, there's an inverted hammer. Bullish confirmation the next day, closing above the T-line. Further confirmation. So what type of pattern are we setting up? Looks like a J-hook pattern. Wave 1, wave 2. And why is wave 3 starting? Because of the signals. And what was it telling us about the T-line? T-line area was kind of acting as support. Now what do you do with this one? Very simple. If this opens positive tomorrow, what do you got? A doji sandwich breakout. More than likely, wave 3 is in progress. All right, so we've been using this chart over and over just because it's got all the elements of common sense candlestick analysis in here. Where was it time to take profits? Let me make this bigger. You can see that you got a lot of dojis. It wasn't going anywhere. And what's our doji rule? It's going to move in the direction of how they open it after a doji. So you can see that when this opened lower, where were we as far as the T-line? Below the T-line. Probably up here, you were starting to see some selling in some of your long positions. Now, this is where you don't go from long to short in one day. If you've got 10 positions on, which is part of the money management system that keeps your emotions out of your trading, probably selling off a long, buying a short, selling off another long, buying another short, selling off a couple longs, going a couple more shorts. So by this time, you're starting to be oriented toward the short side and adding to it here. Now, the rhetorical question was there any anticipation from this that we were going to do this? Obviously not. But back to the same analysis that this basically put us in the right direction at the right time so that we could be benefiting from this move. Now, what was our first reversal? Again, gap down in the oversold area. Didn't do a sell signal. Gap down in the oversold area. There was a reversal signal. A hammered doji. What's our simple rule? If it opened positive, it's probably going to trade positive. If it traded positive, where was our first target? Oh, the first initial gap down? Where are you? You're right here. That's telling you, yeah, they're starting to sell off hard. What's the difference between that gap down and this gap down? This gap down was telling us they're just starting to sell, Your stochastics coming out of the overbought is heading down. This gap down, you were already in the oversold area. That tells you they're probably getting near exhaustion. Start looking for a reversal. Screen and sound locking up. Tried to reloading the seminar a few times. Okay. All right. Sorry, Tom. So the gaps are important. First of all, they're starting to gap down away from the T-line. Remember, this is kind of the reverse chart of Tesla that we looked at. They start gapping it down, and then they did a reversal signal. Where were they heading back to? Up here to the T-line. If you had been buying, you want to see what happened here. The fact that they gapped it down the next day told you to get back out. Because now what do you have setting up? A bearish J-hook pattern. So here was the question or the analysis we put in the YouTube tonight. We were short, started covering the shorts right in here because that looked like we were getting to about wave 3. Unfortunately, missed out on a lot as the market continued down. However, what is the difference between that bullish day? Why wasn't that a reversal? Or this bullish day? Why wasn't that a reversal? Or this bullish day? Why wasn't that a reversal? Anybody? That's because these were not reversal signals. Yeah, they weren't, these are not signals. These are just bounces up in a downtrend. What are these? Those are potential reversal signals. You're spinning top. You're spinning top. That has a lot more credibility than these days right here. So that's why over the last few weeks you can keep hearing me say, what's the nature of the market? The market was up, down, up, down, up, down, up, down. There was no continuity. Yeah, just whipsaw. Now, we've got a little bit of different analysis here. These were up days, but not reversal days. These are dojis. Those have more potential of indicating a reversal. Yes, now you got indecision going on in the oversold area, a decent distance away from the T-line. Okay. I guess that's about all I got. My issues with reversal here is closes of Amazon, Tesla, plus Apple week. Well, but you've forgotten the other side of that coin. Even though they didn't close near their highs, they still traded up. Stochastic still coming up. I wouldn't say that that was a weak signal. I would just say that's indecision, but you're still in an uptrend. What would be the ultimate reversal or weakness if they close back below the T-line? Okay, I guess with that, we can do charts. So Jim, go ahead and do the double line. And in 3.8 seconds, do the next double line. Oh, I got to stop the... All right, I'll be doing these fast, so that we're not here until the cows come home. Nugget, still in a downtrend. Even though gold wasn't doing too much of anything. It's trying to base in here. FXC stays short. But notice your gap down in the oversold area. I'd have a safety stop right here if I was short. I wouldn't want to see it come back up through there. Oops, it scrolled past me again. Pen, bullish Harami today in the oversold area. I'd have a safety stop if I was short just above today's high. CGC, that area has been doing some buying. You can see the doji. I'd be a buyer if it came back up through the T-line. Still needs some confirmation. Hertz, another bullish Harami in the oversold area. Remember, that's an indication that the selling has stopped. So you want to put your, if you were short, you put your safety stop at today's high. SPNT, still in an uptrend. Some of the grocery stocks started selling off. That and BJ's started selling off. So here's a good example also that maybe up here I would have put a stop at the halfway point of this candle, but it shouldn't come back down through that level. Again, just a logical spot to tell us where the buying or the selling shouldn't move. That was a touch of the 50. Now here's what I do. If I see something that's moved up and hit a kind of stretch to get up to a resistance level, that's when I flip to my 10-minute chart. And I don't see where it happened. Let's say it was right here. But if it started trading back off, back through the 10-minute T-line, that's a pretty good indication that the 50 is acting as resistance. You take some profits. And FedEx. We did FedEx. FedEx was one of those. I am on. Something is wrong. That's what was wrong. That isn't the 10-minute chart. That's why I couldn't find it. There's your 10-minute chart. There's your failure up here on I'm on the wrong chart. There's your sell when it hit the 50 and you did a shooting star, closed below the T-line. What did that tell you? It told you pretty much that they were not going to go through the 50. Take your profits. FedEx, left-right combo did close above the T-line. That's a lot more compelling chart. There's going to be more upside. Roku is still not out of the woods yet. It's starting to show some buying. If I was short, that was kind of a piercing signal, then a doji bullish confirmation. If it trades positive tomorrow, I'd cover short positions, but I wouldn't be going long until they get up through the T-line. Do you measure waves in points or percentage moves? Just by a visual move. Which ones were we looking at? Zoom. Zoom. If I can kind of calculate that it went from 80 to 125, that's, I can figure this out. That's at 45 points. I kind of figure 45 points. Now, will it be exact? No, but at least I know I'm in another strong wave. And the end of that wave isn't a dollar amount or a percentage. It's when I get up here in the overbought condition and I start seeing sell signals. So it could either be exactly at those levels or it could be much lower or much higher. The important aspect of any reversal is the signals themselves. Here's another one that's setting up. AMRN, Doji, kind of a little left-right combo. This one, if it opens positive and trades positive, you can be buying because what's that telling you about the T-line? A buy signal, and they're coming up through the T-line is changing the investor sentiment. Maxar, you stay short until you see a buy signal. XLK, you get ready. Still junky. I wouldn't be long or short this one. If I had been short, look at your inverted hammer. You're starting to see green. If you're short, you can stay short, but if you start seeing some more buying, I'd probably close it out. PI, bullish left-right combo. If I was short, I'd be covering the short with the expectation the first bounce is going to be back up to the T-line. PBYI, there's another. Bullish engulfing, doji, came up to the T-line. I'd be a buyer of this one on positive trading. What's my first target? Well, probably down, or at least here, or fill in the gap, which would still be part of this downtrend. American Express. Nothing here. That's not a reversal signal. If you're short, you stay short. And is this Phillips? Oh, Pulte. Another one where you stay short, but you're seeing a doji. I'd have a safety stop if I was short up above or at today's high. Ollie, nothing. It's not a reversal signal. At this point, I would just say you stay short until you see it close back up above the key line. Let's see, we did XLK. WPG. Another one you can get ready to buy. I don't have volume on here. Just make sure your volume's good on that price stock. But I wouldn't buy it until it got back up above the key line. TEL, spinning top. Once again, if I was short, still use, again, these indecisive days make it very simple. Just put a stop above that signal. And if it comes up through there, the probabilities are pretty strong. They've reversed it. NLOK. Nothing here until they get back up above the T-line. You can see how the T-line's still acting as a resistance. Honeywell. Long-legged hammer, doji. Again, I'd have my safety stops up here. Wouldn't want to see it start moving in that direction if you're short. Or if you want to be aggressive, you could be buying with the anticipation they're coming back up to test the T-line. And then you see what happens at that level. Shake Shack, another one where you can see the buying is occurring down here. Wouldn't be short at this point. And I'd be going long if it closes back up above the T-line. Still need some drink here. Can't tell if that's quite a bullish engulfing. Close enough. Close enough that if I'd been short, I would have stopped out today when it came back up through that level. Wouldn't necessarily be a buyer of this one yet until it gets back up above the T-line. TCPC. That is a bullish engulfing. Get ready to buy this one and watch to see what happens once it gets to the T-line area. OKTA. That one did close up above the T-line. It's not a very enthusiastic chart. Just nothing wildly exciting about it, but you're probably in an uptrend. And Microsoft, oops, now to make it bigger, Microsoft still hasn't been able to get started. It's trying, it's basing, but right now I wouldn't be long or short Microsoft. Goog, same scenario. Probably wouldn't be short anymore, but I wouldn't be going long yet. The SPY, same thing. You got these spinning tops down here. Get ready to start buying if it starts coming back up. JD.com, nothing here yet. That's a junky chart. If you're short, you can stay short, but I'd still use the T-line as a stop. Marna got hit today. That would have been a toughie. If you stay long, don't let it trade back below the T-line. That's right. Too far from the T-line is your social distance. And here's a good chart. This one came up on my, we pointed this one out a couple nights ago. Inverted hammer, doji, bullish confirmation. Nothing to do here except stay long with the anticipation. At least your first target is up there at the 50-day moving average. ZS, same scenario. Stay long. Labu. Nothing yet, but you can see how it's trying to base. If you're going long, it's on the idea that your first pop should be back up to the T-line. So if I was buying this one tomorrow, with this being the candle that told us the bulls were taking control, where would I not want to see it close? If it opened positive and I bought, it better not close more than halfway down this candle, because the Japanese rice traders have very simple logic. If the candle that told us the bulls were in control and the bears were able to close it more than halfway down, the bears are still in control. Trade desk. Oh, tonight on YouTube, Lee, it was just the afternoon comments. So I don't know how you get there. I don't know how to get there because I only come in from the back end. Trade desk wasn't quite a reversal. So I guess if you just type in candlestick forum, that should bring it up. I think I typed it in as Candlestick Forum, Market Direction, March 19th, 2020. Another one that had a bullish harami, is starting back up. You can buy this if it goes positive tomorrow. Work, closed right on the T-line. Makes it very simple. If it opens positive, your bullish signals are now breaking the downtrend. PetQ. PetQ is up strong. Doji, bullish confirmation. Another one you can be buying on positive trading tomorrow. Glue. Stay long. Use the T-line as you stop. Mark, all my scans I do with stocks that trade at least 200,000 shares a day. If I'm trading options, I usually pick out stocks that are trading close to 1 million shares a day, because that's going to be a function of the liquidity of your options. Dow daily chart showing tweezer bottom. Not quite, I don't think. They're not quite. Remember, a tweezer bottom would be exactly the same level. However, you can see what's happening. Your tails to the downside, trading indecisively, is just logically telling you that every time they tried to knock it down over the last couple of days, bulls are starting to step in. Delta, you stay short. NCLH, I hate looking at this chart because I covered the short position. Oh, I had puts. I think I covered them right there. No, might have even covered them up there. Had good profits in them. And I would have had huge profits. I'd be taking a cruise by this time. Yeah, it's tried to base CGC. wouldn't do anything until it does get up through the T line. Hertz is talking about bankruptcy. Wow. And Kroger, yeah, backed off. But it's still, notice where it backed off to. This is why the fact that you don't have anybody using the 3T line or the T line, look how it uses those moving averages as support, which tells you something. Basically tells you because nobody has them on their charts, they're natural kind of support and resistance level. That might be a reversal on DXC. I'd be a buyer of this one if it opened positive tomorrow. Walmart was doing well, but backed off. But notice it's still above the 3T line. So just because you've had a down day doesn't necessarily mean it is reversing. BJ, are you talking about BJ versus BJF? That one you still have to see whether they open it positive and trade it positive because it still stayed up above the T line. UPS, no, you're still above the T line. Do you go long? Oops, scroll. After bullish Harami and a positive trading if below the T line, or wait till it closes above the T line? Now, if I see a bullish Harami and it opens positive, that's a pretty high probability indication that the BJS is not coming up on my charts. Remember, what a bullish Harami is telling you, the selling is stopped. If it opens positive the next day, you can be buying with a high degree of probability. And then, very simple stop. If it closes back below the halfway point of the candle that created the Harami, you close it back out again. But the probabilities are, if you see a bullish Harami in the oversold area and it opened positive, that's the whole reason we're looking at bullish Haramis, because the probabilities are pretty strong and an uptrend is starting. LAUR, bullish engulfing, next likely target could be the T line. Let's see, we did all those. No, Zoom, just starting. Where is the breakout of this J-hook pattern? Right there. So if it trades positive, it's just starting the next wave to the upside. Well, remember, if this opens positive tomorrow, which way is it going to go on Zoom? It's going to go positive. And if it goes positive, what type of signal is it creating? A bullish doji sandwich breakout. Sprint, left-right combo after a long-legged doji off the 200. You can get ready to buy this one if it opens positive tomorrow. AMRN is getting there. You can get it. You can be ready to buy this one on positive trading tomorrow. We did trade desk. Boeing, I keep watching. Boeing has got gap down dojis in the oversold area, and there's not a single person out there in the world that wants to be buying Boeing, which tells you it's time to start buying Boeing. Especially with the gap down 2 dojis. Eat, Morningstar signal. Look for this to bounce back up. If it bounces back up to the T line from here, you've got a good 30% upside. No, the T line is the black line. The 3T line is the green line. I guess when it is said to sell into strength, it means flipping to the 10-minute chart and get out and see if there's a sell signal there. Yes. especially if you're in a situation where you're way above the T-line. So you can see on the VIX, you had a bearish left-right combo. They gapped up and did a spinning top yesterday, did a bearish engulfing. You could have been starting, because that was a warning, you could have been using your 10-minute chart. Or if this opens lower tomorrow, which means the trading positive, the market's trading positive, so they're going to send that one down lower. The S&P 500, spinning top, doji, in the oversold area. Be ready. I don't know what the pre-market or the aftermarket futures are going tonight, but I saw they were down a couple hundred points. But remember, the aftermarket futures don't mean a hill of beans until you get to about 10 minutes before the market opens. That's when everybody is making their decisions of whether they're putting out their buy orders or their sell orders. So SFIX, this is why if you're buying down here, you always hear me say, watch to see what it does once it gets to the T-line. Now you watch to see what it does here at the T-line. If it opens positive, you're probably now coming up to fill the gap. If it opens lower, tells you the T-line's still acting as resistance. AMD, nothing. Right now, I probably wouldn't be long or short. You're supporting off the 200. You're resisting at the T-line. Now you wait to see which way it goes from here. Oh, I haven't even looked at Beyond Meat for weeks now. Well, you had a bullish engulfing signal. So that was one of those story stocks that just kind of disappeared. And same thing with Space, another story stock that when it reversed, nothing there anymore. The T-line is the black line. Yeah, you need confirmation. ALLK. There you closed above the T-line. Look at your scoop type pattern. Left-right combo. Look for a slingshot effect off of here. I like KTA for day trading, all right? And Boeing, again. Boeing, even if it bounces, could go from 100 to basically 150. And Target, what? The 3T line is the 3 exponential moving average. And we'll do a session one night on, it's so quick. If you see a sell signal and a close below the T line, the charts are telling you it's time to go short. It's confirmed if the 3T line closes below the T line. Crude oil prices were up $5 today. Crude oil was back up to $25 I can pull it up. Right now it's at $25.78. So it was at 20 yesterday. Now it's back at almost 26. Which should probably be putting a little bit of support in the markets. Siri, nothing there. That is a tweezer bottom. You can see how they're right basically at the same level. So you could be buying this one if it came back up through the high of today, or if you're short, you cover your short at the high of today. And PSEC, bunch of buy signals and a close above the T line. There's your first target, the gap, which means you at least you'd be heading in the right direction and confirming that you were staying above the T line. Big bullish engulfing on Agco. Get ready to buy this one. The bigger the signal, the more compelling they've reversed it. Dana Auto, another bullish engulfing, same scenario. If they bounce it back up to the T line, that's going to be a good 35% return. I don't think they will, I don't think they will let the banks go, or the airlines go bankrupt. And booking stays short. Oops, I still have to scroll down here. Guild, kind of your shooting star, right at the last peak. So you have to watch this one. You might see some profit taking, but you're still well above the T line and you're not anywhere near the overbought area. So you're probably going to see some backing and filling. Silver, nothing yet, trying to base. If you buy immediately after a gap up from a doji, could you be caught in a bearish engulfing? Better to wait? Well, the probabilities are that if you're in the oversold area and you see dojis and they open positive and starts trading positive, just put a safety stop at the doji. It shouldn't come back down through that level. If it does, they're not. It's not a bullish confirmation. Halliburton, yeah, you start watching to see when they cover the short. UPS, is that a hammer? No, remember where a hammer occurs, CB. CB, have you read any of the books? You should know what a hammer signal, where a hammer signal occurs. That's more of a shooting star. Shooting star bearish harami. So if this opens lower tomorrow, you take or come out of the position. Big gap up, I'd have a safety stop at today's open. Shouldn't come back down through there. Do the open and close matter in a harami? Yes. A bullish harami opens above the previous day's close and closes above the previous day's open. Spread on Zoom. Oh, I think that's what I did today, was a spread, and I can't remember what I did. Was it a 1? It was a $5 spread. Maybe it was a 125, 130 for $1.79. But if it goes above 130, the $1.79 goes to $5. Bullish harami on Carnival with another one. I'm kicking myself because I covered my short positions right there, thinking that they're coming back up. Eat, Morningstar signal. Is this Walgreens? That was a bearish harami. So this one, to stay in, it has to open positive and trade positive. If it opens lower, close it out. You can see where it hit a resistance level at the 200. Now if they trade it lower, what direction are you going? Pretty much sideways. You want to be someplace else. What does fill in the gap mean? If you see a gap space, and I'm trying to think of one, I'll find one here. hopefully in the next few minutes. Bullish, not quite a bullish Harami. It wouldn't be doing anything yet. If I was short, though, I'd still get ready to buy if you start seeing strength. HS, there's a gap right here. That usually becomes a target. They usually come up and they'll trade so that that gap is filled. So they trade up above that level. That's a scoop type pattern on ALLK. I'd be ready to buy this one on positive trading. And silver, you stay long on this. Bullish engulfing, inverted hammer, bullish confirmation. I would suspect coming up here to test the 50. My tweezer bottom just kind of shows there was extra support at that level or extra resistance. So it just acts like another little indicator to say that was a base. So let's see what. Had the Dow come right down to this level and come back up, that would have been a good indication that was a support level. Just adds a little bit more credibility. Booking is closing their doors, all right. Okay, Ray. Cisco. Cisco, you get ready to buy. Look at your bullish engulfing left-right combo. If it opens positive, you got a doji sandwich breakout. INSG, you want to be buying this one, especially if it comes back up through the tops of these levels. Okay, oops, we still got a AMD as a wedge, yeah, but you don't do anything with it until it breaks out one way or the other. What was that, Jake? IFMK. You said you'd have a stop just below today's low is what I meant to say. I'd have a stop right here. This gap up message should tell us we're heading in this direction. If it comes down through there, that's been going in the wrong direction. Does color of a Harami bar matter? You usually want to see a bullish, a red candle followed by a green candle. However, if you see a red candle followed by a small red candle inside, that's called a homing pigeon. But it still requires the same thing. It needs to open positive the next day and trade positive. Oh, let's see. And BIB, oh, that's a Morningstar signal. You can get ready to buy this one on positive trading tomorrow. Rite Aid backed off today. But it's still, so what it's telling us is, instead of it breaking out this way, as long as it stays above the T-line, maybe it's going to be more of this type of trajectory. Okay. All right, just remember on April 4th and 5th, we're going to be doing a butt-sore, brain-frying 2-day training session. But those are very good in the sense that it puts everything in a logical order. So when you start looking at charts afterwards, you're looking at them with a completely different perspective than what you used to do. ZS, just stay long. This is your 3 white soldiers, which is an up day followed by a lower open, up day followed by a lower open, up day. That's telling you every time they took it up, there was some profit taking. They took it up, profit taking, taking it up. That means that's solid buying coming in. Oh, I'm not even sure whether it will stick anymore. There. Oh, if you buy immediately, Phil, I answered that. Well, I answered that, Phil. Where are you? I forget which one we were looking at. So we'll do it right here. A doji. So we see a doji in the oversold area. That if it opened positive and you started buying, where would be a logical place to put your stop? Right here, the doji. Because logic says if it opens positive, when it should be going this direction and comes back here, it's not working. Close out position immediately. So I wasn't ignoring you. I had answered it and thought I had answered it. Okay, everybody. We will see everybody in the chat rooms tomorrow. It will be pretty important to see how they open the futures tomorrow. This is National Oil Well. Nothing yet until they get up through the T-line. All right, everybody, have a good evening. We will see you bright and early tomorrow morning. We'll see you then.